Hello, ladies. Welcome, everybody. We are super excited for another day with she. We're gonna learn a lot today, and the best part is we want to learn things that are gonna make us money, right? That is gonna save us money. Um, so I'm gonna share my screen really quick. Let's get it started. Again, reminding you guys, turn on your cameras, let us see you. Um, Please ask questions, interact with the speakers and everybody. So, welcome to She. I'm Jasmine, I'm your host, and I'm super excited to be another day with you. She builds, she owns, she invests. Of course, she is me, she's all of us. So thank you. We are on a mission to help 1 million women create wealth through real estate while fostering personal, professional, and spiritual growth. So thank you for being here. We are live on Facebook. We would love to see your faces. I see Elisol, I see Elizabeth. So we want to see your faces, even if you're running errands, making dinner, it's totally okay. While you guys do that, I just want to do a quick disclaimer. We're a real estate investment firm. We always have investment opportunities, and every investment has a risk. So please do your due diligence, understand what you do. We are not financial advisors, we are not CPS. We please consult. Also, every speaker that we bring offers different products or services. We do not endorse any of them. We bring them because we love what they're doing. We have learned from them, and we just want to share that with you. A little bit about Massive Capital, and today I have very exciting news. As you know, I'm the only woman at Massive Capital. I've been with Massive Capital since we started. Uh, it's been a great journey with Massive Capital, learning about multifamily commercial real estate. And I've been fortunate to work with a lot of you guys as investors. Everybody who has invested in one of our deals, we have a portfolio of 1,400 units in multifamily, and we also do new construction for retail center. And some of you have came to me to invest, right? To either put your hard money on these deals or your retirement accounts. So I want to share that I'm stepping out of my investor relations role from Massive Capital. Many of you have heard the news. If you haven't heard, I'm here to share that I'm gonna focus on land. I'm gonna build a new company just for land. Of course, the plan is to build a sister company for Massive Capital, right? Like that we can do some deals, but it's gonna be its own company. As I mentioned, I started with land, and that's what allowed me to start investing in commercial real estate, start doing all these things. And, now it's time for me to start, focus on that. I want to share that I'm highly invested in all these deals with Massive Capital. I have been investing alongside with you guys. I'm fully invested. So it's my biggest interest that we have these deals execute and exit as planned. So I'll be along, I'll be here because I'm fully invested in these deals. I'll just be on the day to day. I'll be building another company. Um, so I'm super excited for that. About she, I mean, we will continue, right? Because she's me, she's you, she's all of us. I'll continue to show up as long as you guys continue to show up. I'm here. The power of this community is helping, supporting, and inspire each other on different journeys, right? On a different stages of our lives, not just professionally, but personally, spiritually. So we have each other here. I'll continue to show up. I'm super excited for she. I have a lot of big plans. So yeah, thank you so much. Thank you for the hearts. Thank you for all the support on that. I'm excited, to start this new venture. It's very challenging. I can talk. That's another session, but all the imposter syndrome, all the things that come on. Am I ready? Do I really want to do this? What if I fail? What if a lot of things that I've been through, like we all go through that. So I just want to say thank you, because I get super inspired from each of you, getting to know your stories, why are you doing this, and how are you doing things. It's super exciting. So thank you. Once again, thank you so much for this. And I'm super excited to bring you alongside with me on this new chapter. As I mentioned, I'll continue here. The first and the third Tuesday, we have she webinars. The second and the fourth Tuesday, Trevor hosts different webinars about commercial real estate. So actually, Trevor will be taking on all the investor relations side for massive capital. So if you want to invest, definitely connect with him. He's here, and we will continue working together. We have a sponsor, a Skyline Title, so we are super excited. If you are looking to close some properties, be sure to check them out. It's important to have a title company who works with investors and understand what you're doing and how you do things, right? So check them out. We have different events coming up. We have one here in Houston in October, so stay tuned for all the details. But we go everywhere, right? Um, it's different when we see each other in person, and we can hug each other, and we can share about different things of that we are doing in person. So be sure to join us in person. And of course, real estate, why I invested in real estate. And today I want to open up the mic. Why are you interested in real estate, or why have you invested in real estate? Like, what brought you here? Why real estate? What about real estate piqued your attention? Open your mic. I don't know who can talk. Who wants to share a little bit? Elisa, do you want to share a little bit? I think this is the first time that you join us.
Yes, it's the first time. Actually, Trevor invited me. So yeah, so I joined the Big Dog group well, not a few, 6 months ago about. Time flies, so I'm learning, and I am taking all the training and doing all more in the residential investment. But so I met Trevor with the commercial investments here in Houston in one of the meetups. And at some point, I'm planning on getting into the commercial investments. But so my background, I am a project manager from the oil and gas industry for many years. And I decided to do this. I don't want to do that anymore. So I kind of was doing that by myself. So I have some rentals that I have acquired over the years, but now I'm doing this full time. Yeah, it's very interesting for me. It's something different. I want to have a better use of my money, have my money working for me. And that's why I'm here.
Wow, welcome. Definitely you're in the
Thank
right
you.
place, and you're surrounded. The first step is knowledge. What I tell people, if you want to invest, the first thing that you want to invest is in knowledge, right? So you're taking all the trainings, you're meeting people. So I'm excited for you, because you know, that's how everything starts, right? Putting the time, putting the energy, and then, of course, connecting with people. I tell people you're one connection away from a completely different life, and real estate is no difference, right? If anything, that's what is gonna fast track your opportunities. So, welcome.
Thank you.
And there's, of course, you mentioned you want to put your money to work for you. And I think that's a big drive for all of us on why real estate, right? Because we know even if we're not working or if we're traveling or vacation or, our money is working for us. And then when you are in corporate, if you don't work, you don't make money. So that's definitely a big drive for all of us. So thank you. Thank you for sharing that.
Mhm.
Without further, I'm gonna introduce our speaker tonight. It's gonna be a really good session. Gavi, she goes by Gavi. She's a tax planner. Oh, hold on 1 second. I got confused here. Okay, yes. Okay, let me tell you a little bit about Gabi. She is a tax advisor and entrepreneur specializing in advanced tax planning and real estate accounting. With expertise in IRS representation, small business taxation, and over 200 tax saving strategies, Gavi helps clients minimize liabilities legally and effectively, dedicated to serving real estate investors, business owners, and high income professionals. Gavi combines deep technical knowledge with practical financial solutions in her free time. She blogs, reads, travels, hikes, and dances. Oh my God, welcome, Gabi. Thank you so much for being here with us.
Thank you so much, Jasmine, for the wonderful introduction. Thank you so much, ladies, for being here. I know it's late in the evening. We set aside time just to be here, become more aware of, what real estate investments really have to offer, in terms for us, especially women, because I genuinely I believe that women should be empowered. They should feel more empowered. They should have money in their hands. They should have financial independence. They should be able to create a lot of passive income for themselves, especially for retirement purposes, and be able to just, have control of their life without having to, look at someone or be dependent on someone, if you know what I mean. So, without further ado, let's begin with the presentation itself. And let me just go ahead and start screen sharing. Jasmine, let me know once you see the screen. Do you see it now? So,
It's loading, so
okay.
yeah, we can see it now. Go ahead, take it
Okay.
on.
Thank you so much. Thank you. Thank you so much. So my name is Gunveen or Gavi, whatever is convenient to you. My formal name is Gunveen Bachher. I am based out of the Spring Woodlands area. We have an office in on FM 1960. I don't know if you're familiar with Houston or not, but that's Northwest Houston. I am an enrolled agent by license, but I have a team of CPAs and EAs who assist with tax planning, entity selection and structure work, also the regular tax preparation and accounting work. Okay. Now about the company. I founded this company a few years ago before COVID. I kicked my job. I was done with it. There was no satisfaction. I worked with a company that was into indirect taxes, a lot of sales and use taxes. Um, and I founded the company called Gav Tax, kind of coming from my nickname, which is Gavi. That's kind of what it is. So, okay. And then, so we specialize in real estate tax strategies. 100% of our clients are into real estate, either full-time or part-time. So they either are W-2 earners, and then they have real estate investments, or they're just investors full-time, both into residential and commercial real estate. So when I say commercial real estate, they own strip malls, they own storage spaces, office spaces, um, and things like that. And also the regular residential real estate, which comprises of investment into single-family homes, townhomes, condos, and mobile home parks under commercial real estate as well. I'm sorry, I forgot about that too. Now, we do help investors reduce their tax liability and eventually grow their net worth. That's our motto, that's our vision. Like I said, all the clients are investors. They're also syndicators, both from the GP, LP side, which means they are either full-time into multifamily or they have a stake as a limited partner. Um, they can also be wholesalers, flippers, and also doing rental arbitrage and short-term rentals. Basically, everything that goes on within the real estate world, And that is what our clients do, a mix of everything or just one. So we deal with small businesses, we also deal with investors and also high income wage earners at the same time. Moving on, why do, yeah, as Jasmine said, why do you want to invest into real estate? That's what she mentioned. That's what she asked you guys. Now, that's the question that I have for you too, and probably I'll have the answers myself. So, why is real estate a tax advantage investment? Number one, when you invest into real estate, you can take something known as depreciation, which is a phantom expense that we can create on your taxes. And it's one of the largest expenses that you can account for on your tax return. And for that, in order to take depreciation, we need certain information from our clients. There are lots of different types of depreciation that we can take. We can even take cost segregation, bonus depreciation, the standard depreciation, so on and so forth. The second advantage of investing into real estate is that you can use something known as 1031 exchanges. So if you have residential real estate of your own, you can roll over those capital gains into a new property or new properties, um, and avoid paying those capital gains altogether. So 1031 exchange is definitely something that you want to look into and how to do it. The other advantage of investing into real estate is that if you hold on to a property for more than a year, you incur something known as long-term capital gains. And the tax rates for long-term capital gains are much lower versus short-term capital gains. If you hold a property and investment for less than a year, you would end up getting hit with something known as short-term capital gains, which is something that we don't want because short-term capital gains get taxed all the way up till 39%. And the last reason, obviously, is to create passive income. So you want to be a passive income, maybe millionaire. Maybe that's the kind of affirmation that you want to make for yourself, ladies, this year. And, that's how you want to retire, because why? Because passive income gets taxed lower than active income. So we have two different types of income. We have the active income and we have passive income. Active income is all your income from your wages, your businesses, your interest income, versus passive income is all the income from your rental properties. And passive income, which is your income from rental properties, it gets taxed much lower. It gets capped at 20%. So anywhere between 0 to 20% is going to be your tax rate. We just talked about this capital gains taxes, just the basics of it, a very high level summary. There are two types of capital gains, ladies. It's short-term capital gains. If you hold on to your property for less than 12 months, you get taxed at ordinary tax rate, which could be all the way to 37% and even 39% actually, and plus another 10 to 12% for state taxes, especially if you live in the state of California. So your capital gains taxes can be really high if you hold on to your property for less than 12 months. However, if you hold on to your investments for more than a year, which is even if it's 1 year, 1 day, if you hold on to your property for 1 year, 1 day, you can get taxed at anything between 0 to 20%. Now, there are additional taxes that you need to be aware of. If you are especially in the higher tax bracket, you might get hit with something known as net investment income tax, also known as NIIT, and that is going to be 3.8% over and above all the capital gains that you've made. So my advice is to hold on to your property for as long as you can and try to use tax deferral tools such as a 1031 exchange or make most of the opportunity zones as well. And we'll get into what opportunity zones are in a short while from now. Um, so the question that I commonly, I get asked is, what are the ways to defer capital gains taxes? Why? Because capital gains taxes can be massive. And the general answer is, what I give is use a 1031 exchange to defer those capital gains if you can. Use qualified opportunity zone programs for deferral and exclusion of capital gains altogether. You can also use something known as an installment sale to spread your gain over the year. So you pay only the gain for that year. You don't pay a gain collectively. If you sold a property for say for whatever amount and you made gains of say $80,000, you don't owe that taxes, capital gains on that $80,000 in that year in which you made that sale. You can spread that gain over 10, 15, 20 years. And that's what an installment sale is. Again, like as I said, just a high level summary of what it is. You can also use something known as CRT, which is charitable remainder trust planning. That is if you are into charity. So yeah. Okay. Now, bonus depreciation was a big thing this year, especially after the new administration came in and people were asking, oh, what's going to happen to bonus depreciation, especially since it was kind of capped at 60%. It was supposed to be capped at 60% in 2025. But then in January earlier this year, Trump passed this bill called the One Big Beautiful Bill, and where basically he bumped up the bonus depreciation benefits all the way back to 100% this year. So what bonus depreciation basically means that all the components within your residential and commercial real estate, they can depreciate faster. You don't have to wait for 27 and a half years for residential real estate properties or 39 years for commercial estate in order to write off the components within your property. So when we say components, we are basically referring to improvements and that you made, any remodeling, any addition of bathrooms or the deck space, any electrical appliances that you've added or HVAC systems, because these are expensive items. So what the IRS says is you can depreciate the value of these assets, of these real assets, faster than the value of the building itself. That's the underlying principle of bonus depreciation. Now, bonus depreciation can be used for tax planning purposes as well. So we can combine the benefits of bonus depreciation with cost segregation, and this can definitely help high income earners offset their income as well. But the condition is you need to be owning some property. So you need to be, you should own some investment properties. You can carry forward the benefits from bonus depreciation and even cost segregation into future years indefinitely. So if you have any net operating losses, you can carry them forward indefinitely and use them in the year in which you think you have some income and then just use those to offset. The only condition is that the asset must be placed in service during the tax year. So if you're talking 2025, the asset should be placed in 2025 as in the year of use in your rental properties. Okay, moving on, we talk about cost segregation studies. Another big benefit of owning real estate is that you can get these studies done on your investment properties. It plays on a similar principle. What cost segregation experts do is they depreciate the value of your assets faster. Your carpets, your cabinets, your wiring, HVAC, everything gets depreciated faster. You have 5-year, 10-year, 15-year assets within your investment properties that can be depreciated faster than the value of the building itself, like I said. So it's also known as accelerated depreciation. People use the terms, they kind of switch and they swap. So people use cost segregation studies. People use the term accelerated depreciation as well to, just for, having a conversation. So it's the same thing, one and the same thing. If you bought an asset, say last year, and you forgot to get your cost seg study done in the year of purchase, you can, and it's 2025 this year, you realize you forgot to get your cost seg study done, you can get your studies done retroactively and use the results of those cost seg studies in 2025 in order to reduce your overall taxable income. Now, I'll give you an example. So cost segregation, use cases, people who do multifamily investing, it's a $1 million multifamily asset. Cost segregation may yield up to $250,000 to $350,000 in deductions in just the first year itself. And then you combine that with bonus depreciation, which is now at 100% for a larger offset. Now, generally, what they say is when you go to cost seg experts, they say that the value of the building should be around $500,000 in order for you to actually avail the benefits of a cost seg study. But that's not true. from my experience, what I've seen is generally, even if you have, residential real estate, which is, worth 300, 400, even $200,000, and it could be anywhere. It could be in the state of New York, especially where properties are so expensive, or Boston, cities like Boston or LA. You can get your condos or townhomes done, get cost-seg studies done on them, and you can still avail of the benefits. So it's a myth when people say that the fair market value of your commercial or residential real estate should be more than 500,000. That's when you actually can literally avail of the benefits, but that's not entirely true. Um, Definitely, if you take the benefits today, the biggest disadvantage is you'll have to pay something known as depreciation recapture tax on the sale of that property. And that is one of the biggest disadvantage of taking any sort of depreciation, be it the standard depreciation over 27 and a half years, or using accelerated depreciation to the cost segregation as well. Some investors don't like it, but what I generally say, I play on the net present value concept, which basically says that a dollar is worth more right now. So if you avail of those benefits now, it's going to be more fruitful. Who knows 10 years from now whether you want to go in for maybe a 1031 exchange or an opportunity zone program. So you can definitely roll over those gains then. So why not save that money right now? As well by taking depreciation on your taxes. I'm sorry. Okay. The next big thing in the real estate world as an investor, and that's something that it's good to know and you should be aware of, is claiming the real estate professional status. So if you are full time into real estate investments, this is something that you must be aware of. You should claim, I would say, the professional status again, because this would help you offset your taxes. So it converts your passive losses into active, and it enables you to offset all of your W-2 or your business income very smoothly, I would say. Now, the condition in order to claim the real estate professional status is that you should be materially participating in your in rental activities. So if you own maybe two homes or four or six, I don't know, residential or commercial, doesn't matter. You have to prove that you actively participated in the rental activity. So you need to show material participation. And secondly, you need to show that you spent more than 750 hours during the year in real estate trade. Now, this can apply to your taxpayer, to you or to your spouse. So one of you is going to be claiming that status on your tax return. That is if you're filing jointly. That's if you're married filing jointly. So the benefits of claiming the real estate professional status, like we've talked about, it allows you to offset all those rental losses against your active income, which is your income from W-2 or your business income. And then it is also, it adds value to your cost seg. So if you've gotten a cost seg study done and a bonus or use benefits from bonus depreciation, then and on top of that, if you claim the real estate professional status, it would help you create more paper losses, I would say, that would eventually offset against all of your W-2 or your business income. The only thing that you need to remember is that this is an area which the IRS audits, and therefore documentation is key in this case. Okay, so we've talked about a lot of concepts so far. I'm sorry, just a quick recap. We talked about, cost seg, we talked about bonus depreciation, we talked about claiming the real estate professional status. Another key concept is in the real estate world as an investor, whether you're part-time or full-time into it, is that of passive income allowance. Now, what that means is, we have clients who make less than 150,000. So people who make less than 150,000 as their adjusted gross income combined or filing single, they can claim something known as the passive income allowance, which is up to $25,000 on their rental properties. So if you have a bunch of rental properties, say, I don't know, half a dozen, I don't know, just saying, and then you make around, say, 100K or something like that from your W-2 income, you can, if you do your taxes correctly, you should be able to avail of this allowance, which the IRS grants to investor clients. So that's something that you need to be aware of. Um, Generally, the rule says passive losses offset against passive gains. So all your rental losses against rental income only. But unless the real estate professional status is applied. But in this situation, since if you avail of this allowance on your tax return, the losses from your rental properties can offset against your active income. So if you see what I mean, so even though the rule says passive losses offset against passive gain, if you have losses up to 25,000 in passive losses, then in this situation, it's going to offset against your 100K worth of W-2 income. Mm. And in case if you do cross the 150K limit in terms of your AGI, your just your gross income, then it's worth it to worth for you to claim the real estate professional status, I would say. So if you're below the 150K, then obviously you can avail of a 25K passive income allowance. But if your AGI is more than $150,000, then I would say try to claim the real estate professional status either for yourself or for your spouse, in either of your names. Okay. So another big concept that plays very well in commercial real estate and also in residential real estate is that of opportunity zones. And it was designed under the 2017 Tax Cuts and Jobs Act under the Trump administration, when he was previously here. It says if you invest your capital gains, you need to invest your capital gains in qualified OZ funds. So if you sold a property and you don't want to pay any capital gains, you can invest into an opportunity zone program. We talked about this in the second slide, when I started. So this is a great tax planning or a tax deferral tool. People who don't want to pay anything in capital gains taxes. Um, there are certain rules which are kind of strict, I would say, when it comes to investing into OZ programs. What you need to do is that you need to invest your capital gains within 180 days of sale of property. So within 6 months of sale of property, you need to be investing into a qualified OZ fund program. And then you need to hold on to your investments for at least 10 years. The longer you hold, the higher the chances of eliminating the gain. So if you hold for 5 years or 7 years, you will probably end up eliminating partial gains. But if you hold for 10, 15, 20 years, you'll be able to eliminate 100% of your capital gains from sale of your previous property, whatever you sold. Now, it says 2026 you can defer all your original gains if you starting 2026. But now the rule says that up to 2047, the rule has been extended under this program. So if you hold on to your investments all the way till 2047, you can eliminate all your capital gains on the investments that you're selling off, trying to get rid of, basically. Um, Okay. So again, opportunity zones or investing into OZs is a great tax planning tool. It is ideal for high net worth investors who might be exiting from highly appreciated assets and they don't want to be paying anything in capital gains. There are certain tests that need to be met, such as the substantial improvement test. You need to prove to the IRS that you would be investing in certain zones, certain properties, and you need to be making certain amount of do some remodeling and improvement work on a certain structure in order to claim the benefits under the program. Now, this program is not ideal for flippers, people who flip properties or indulge in short-term strategies. This is definitely for the long haul. That is if you want to invest 10, 15, 20 years or more into real estate. So again, since we're discussing tax strategies, tax planning, legal tax avoidance, legal tax deferment, and all the good things that people want to know in the real estate world as an investor, what I generally say is, and these are just good advice that I see, we do it all the time at our workplace, is use a cost seg and bonus depreciation to create those paper losses. Claim the real estate professional status to use those losses against your active income, even if it's less than 150,000 or if it's more than 150,000, doesn't matter. And try to defer your capital gains using a 1031 or a qualified opportunity zone program. So again, a summary of all that we've spoken about so far is that real estate investments, as an investor, your job is to know what those strategies are, how can you use them to your benefits. You should be able to stack those strategies one on top of the other in order to reduce your tax liability, to reduce your capital gains, eliminate those capital gains, etc. You should have an exit strategy. An exit strategy is when I say is a 1031 or a QOZ for deferral or elimination. So that's it from me for now, but this is where we are based. We have a small office in LA as well, but we have a team in Houston too. Feel free to reach out to me at the following number if you have any questions. But yes, we are not just tax planners. We are tax strategists as well. You can find us on Google as well. We are all over on the internet too. So yeah, if you have any questions, feel free to reach out to me at gavtax@gavtax.com. And yeah, so thank you so much, Jasmine.
Awesome. Thank you so much, Gav. That was a great session. It was like drinking from a fire hose. I know there's a lot of questions on the chat, so I'm gonna encourage the ladies to unmute yourselves and ask your questions directly. While I try to go get some questions here. Is anybody ready with their questions? Ben is asking if there's anything that you can accomplish with a traditional 1031 that you cannot accomplish with a lazy 1031.
What's a lazy 1031, first of all? So there's either a reverse 1031 or a traditional 1031. And you can, a 1031 exchange is definitely very stringent. It has very stringent requirements. The 1031 exchange has a 45-day and a 180-day window in which you have to accomplish your the sale, the exchange of those properties. So you can exchange a single family home for two single family homes, or a single family home for maybe two condos, or maybe two condos for an office space. So you accomplish pretty much your capital gains deferral if you go in for a 1031 exchange. And 1031 exchanges have very tight requirements when it comes to equity. The number one is the equity requirements. So you have to make sure that if you're selling a home for, say, 300K, then the next property that you buy also has to be worth 300K. If it's worth less than 300K, then you end up paying taxes on whatever is remainder. So if you end up buying, say, a condo for 250K and it's still a 1031 exchange within the 45-day or a 6-month window, then you end up paying taxes on that 50,000 that gain that you made. So that is the equity requirement, and of course you have the time requirement as well. Like I said, the 45-day window and the 180-day window that you have to accomplish. There's another window that you have to, there's another requirement that you have to fulfill in a 1031, which is that of a titling requirement. You have to make sure that the titles are correct, and that if the property that you're rolling over, the first property is in your name and the second property also happens to be in your name, or if the first property is in the name of a partnership, then the second property that you buy or invest into, or properties that you invest into, also have to be in the name of a partnership. So the titling requirements also have to be met. So number one, the equity requirements. Number two, the time requirements. And the third is the titling requirements that need to be met when it comes to a 1031 exchange. And therefore, that makes a 1031 exchange very cumbersome, I would say. But at the same time, it's still worth the effort, because if you don't want to pay, 50, 60, 80 grand, depending, 150, I don't know, whatever the investment is worth, then it's definitely worth the effort. I have clients who do it all the time. So it's definitely something to look.
Thank you. I'm not sure if that answered your question. Please let us know, or feel free to unmute yourself. LSO, she's also asking, what are the requirements to get the real estate professional status?
Absolutely. So, Elisol, are you a full-time wage earner? Like, are you a W-2? Are you into a full-time job? Yes. Okay. Okay. So the two requirements to a real estate professional status, number one is you need to fulfill the time requirement, and the second is the material participation requirement. So if you own properties, it's easier for you to prove the material participation requirement just because you can say, yeah, I own those properties, I manage those properties, I look after the plumbing or the emails or rent collection, checks deposit, visiting the properties, remodeling, things like that. So proving the material participation is not a problem with most investors. But the main problem comes with the timing, the number of hours pitched in. Now, especially for people who are full-time business owners or are full-time wage earners, people who have jobs, 40 hours. So what the IRS says is you need to be able to prove that you are working 41 hours, which is basically more than 40 hours on a weekly basis, um, into your real estate investment business, into your investment business. Now, that doesn't mean literally you pitch in 41 hours week after week after week. What it's trying to say is that you've put in more hours into your real estate investment business than into your job. So therefore, when it comes to, if you are a full-time W-2, it's definitely a point of contention with the IRS, where, it becomes a bit of a dispute where you really literally have to kind of prove to them that, yes, you did spend more time in your investment business than into your job. So, in your situation, but generally, clients, people who are full time into real estate investments, for them, it's not difficult to prove the 750-hour requirement because that's what they do day in and day out. They're looking for deals, they're traveling, they're viewing properties, they're closing deals, they're negotiating, they're getting the funding, they're talking to hard money lenders, things like that. So, all of those hours they actually account for towards your real estate professional status. So two requirements, time and material participation, just to answer your question.
Okay,
Did I answer your
thank you.
question?
Yeah, thank you.
Okay, thank you so much. Thank you.
Wanda, you are up next.
Thanks. I have a question. Okay, so I have two properties in Texas, one in Georgia. I live in Georgia. Okay, so are you licensed to also help me in Georgia?
Absolutely. So we are a team of EAs and CPAs. I'm an enrolled agent myself. I'm licensed to practice in all 50 states and even, US territories too. So just to answer your question, licensed to practice in Georgia too. Though I'm based out of Texas, we have clients from all across the country, from California, New York, Illinois as well, where the taxes are really complicated as well. So we handle multi-state tax filings too. So even though you stay in your
Great.
state.
Okay, and I scheduled a meeting with you on your Calendly for
Perfect.
tomorrow to talk more in
I
detail.
look forward. Yeah, I look forward to it.
Wonderful. Thank you.
Thank you.
You're located in Illinois also, and for real estate agents, how does it work?
Sorry, what's the question? Grosh? Is it Grosh?
You're also in Illinois.
We are not in Illinois. We are based out of Texas, but we're licensed to practice in the state of Illinois as well. We have lots of clients who own properties in and around Chicago as well, in the state of Illinois too, rental properties, both residential and.
I'm also a real estate agent. How to write off those stuff. So we can call your phone number and see how things can work out for real estate agent and for tax purposes.
So real estate agents, you receive a 1099. I'm sure you receive a 1099 from the brokerage, right?
Yes, 1099 and
Right.
W-2 also a little bit.
Oh, okay. Okay, very good, very good. Okay, so your 1099 is going to be reported on something known as Schedule C, which is the tax form to use. You're basically telling the IRS that you are a business owner by yourself, and you are allowed to report the 1099 income plus all the expenses that have gone behind it. So all those, the signs that you use, or any of you go for your meetings, the mileage, even your car, viewings, any of those expenses that you've incurred, that you incur on your 1099 business, you are allowed to take that on your Schedule C. And so your income minus your expenses is going to be your net profit or your net loss, and that's how you'll be reporting your 1099 income. And that's how it usually works with real estate agents, everywhere in the country. And that is if they are organized as a single member LLC, like, and then you report a W-2 income as well. So your W-2 goes on obviously on your W-2 on the tax return, but then your 1099 goes on your Schedule C, like I said. So you report your income, you report your expenses, and income minus expenses will either be a profitable business or would be a loss-making situation for you. And you have to make sure that you account for all the expenses as a real estate agent because there's so many expenses that you can account for. Yes, we do work with real estate agents all the time, not just from Texas, but also from North Carolina, South Carolina, Tennessee, Georgia as well. Did I answer your question?
Yeah, awesome. And I put her link again on the chat so you guys can book a call because, of course, when it comes with taxes, every situation is different.
Yes.
So definitely book a call with her. And Alyssa, you have another question?
Yes. So I have a question about 1031. So Gabi, you said that if the property we are selling is the name of, the property is the name of the person, and then the new property has to be on the same name. So my husband and I, we are selling a property in Florida, and we are going to apply the 1031 for a property in Texas. So the property in Florida is in our names, but we wanted to have the property in Texas under an LLC that is owned by both of us.
Yes.
So
Yes.
is that acceptable, or do we have to have the new property on our names, not on our LLC name?
Yes, that's a great question, Elisol. And it is possible to, if the partners in the LLC, which is now basically a partnership, right? It's a partnership between you and your husband. Then in that case, it's definitely possible to roll over the gains from the previous property into the new property, which is co-owned into the new LLC, which is co-owned by the both of you. Now, again, I would say check with the 1031 intermediary. I'm sure you're already working with an intermediary, right? And
Yes.
he will walk you through the titling requirements, like I said. So just check with him and make sure everything is right because not everyone knows everything. Everyone tries to do a very good job, but at the end of the day, we're all humans, right? And so just check with him that if it's possible. Generally, it is, but it depends from state to state. So just check with him once again.
Mhm. Okay, great. Thank you.
Yes. It also depends on the fact where the LLC is from. If it's a Texas LLC, I don't know, is it a Florida LLC? So it's hard for me to say that. But generally speaking, the IRS does allow in this situation. But again, like I said, lots of rules here. Like I said, so just check with your intermediary once again. All right?
Okay, good. Thank you.
Yeah.
Awesome. Thank you. Any other questions? And I'm gonna share my screen. I wanna if you have any other questions for Gav, please bring them on. Also book a call with her directly. But I also want to ask if anybody's new here. I definitely want you guys to introduce yourself and also use these last minutes to kind of like just get to know each other. So if you're new, please introduce yourself. And for everybody here, just put the link on the chat for your Calendly or your social media. So that way we can stay connected, we can connect and support each other. So, I saw somebody on the chat earlier saying, like, if you need a hard money lender or private money lender, please reach out to me. So that's all about this, right? Like, connect with each other. So please put on the chat and anybody new. Who's new here? I'm having a hard time seeing all these multiple screens. Oh, Delia, have you been here before? Jackie, so anybody who is new, please introduce yourselves.
I've been here one time other before, but I'm also a hard money, private money lender in Chicago. 708 278 6900.
Awesome. Well, thank you so much for being here. And we have your contact on the chat. So definitely, we will reach out if anybody needs a realtor or private money lender. Anybody else? We have a couple more minutes.
I just wanted to say hi to Natasha. Natasha goes to Tim Mahi's group.
Oh, Natasha's everywhere. Where are you, Natasha? I see you. Yeah, Natasha always comes here and she's very active.
Hi, how are you? It's always great to be here. This is a wonderful group. They are wonderful ladies, and the education is impeccable. And they always have great speakers. And I totally love the energy and everything that you all do for all of us. It's amazing.
Oh, thank you. Thank you so much, Natasha. I'll keep showing up, and this is great because all of us, right? Because we learn from each other, we help each other. So it's not just me, I just put it together, but you guys, if nobody was here, this wouldn't be as good. Um, Thank you. Thank you so much, Natasha. Natasha has been with us since the very, very beginning. So that is amazing. I really want to thank you so much for consistently being here and inviting others. So thank you, thank you. Who else we have here today? Frederick. So you're an asset manager in Houston, Texas. Tell us more.
Yes, I'm visiting here on the site. Yes, I'm a asset manager, uh, and I work with or coordinate with Massive Masters. I'm actually a financial advisor and dealing in commercial real estate in regards to multifamily and storage facilities.
Okay, awesome. So yeah, that's the beauty about the masters, that everybody breaks out in different asset classes that you want to do. So thank you so much for being here. Thank you for being part of the masters. Keep us posted, all the masters and all of you guys who are part of different groups. Keep us posted. We want to hear your success stories. What are you doing? What deals are you working on? You never know who can add value to you or can help you on any way, right? Anybody else? We have 2 more minutes and then I'm gonna pass it on to you, Gav, again. Anybody else new here? Jackie, have you been here before?
Yes, I have.
Awesome, awesome. Tell us really
Yes.
quick. Probably, once I hear you, I can recognize you.
Oh, I'm just new to real estate investing, just getting started. Uh, I have one long-term rental and I made a commercial investment. So
Awesome. That's good. So you're not that new. Where are you located?
Dallas.
Okay, awesome, awesome. Well, thank you so much for being here. Gav, any last words of advice? Anything else that you want to share?
Absolutely not. It was great working. Well, it was great being here, Jasmine. Thank you so much for having me. If you have any real estate related questions, like I said, since we specialize in just real estate taxes and accounting, and we were voted the top 5 CPA firms last year in Houston area. So let me know. Go ahead, schedule the free consultation, 15-minute free consultation. That's to see if we can help you out or not. If you have more complex issues, obviously, we ask our clients to schedule a 60-minute consultation with us, which is a paid consultation, of course. And yeah, so if you have any issues, anything that's going on that's bothering you, if you don't want to pay that much in taxes, or you want to defer capital gains, feel free to reach out to us. But thank you so much for having me here, ladies. I think you should have full control of your money. That's what I would say. Money is power. Let's, whatever. Let's just let's just say it that way. Money is power. We need to have control of our money in our hands now and in the future as well, in order to have a secured life and yeah, and secure our future. So I think whatever you're doing is absolutely fantastic. It was so nice to be here, Jasmine. Thank you so much. Again, my name is Gavi or Gunveen. The name of the company is Gap Tax, but my name is Gavi or Gunveen, whatever's convenient to you. And it was so nice to meet you all.
Thank you so much, Gav. Thank you, ladies. Thank you, everybody, for being here. Have a great night. We will be in touch. And have a good one. Thank you so
Thank
much.
you.
Bye bye.
Good night. Good night. Thank you so much. Thank